This is our Forex blog for September 16th, 2013. And most people have been asking, they want to just kind of get a feel for how our FX trade signals work each day. Here's the euro dollar, which is basically the one that I spend most of my time trading and making sure that it works. And you can see today's results pretty good. Starting the day off, two little tiny moves up, tiny move up, nailed the low today, nailed the reversal, mainly because of a new pattern I put in that looks for wick bars on range bar charts. This is a 5 pips per bar range chart, and anytime the bar opens, goes down, and then goes up and closes up, it's kind of running out of steam. I don't know if I can see any other examples of that. Pretty choppy day. You can see kind of something similar right here. The bar is going up, or it opens, goes down a little bit, goes up, opens, goes down a little bit, goes up. It shows selling. And basically anytime a market goes up this much and you see some selling like this, it's likely to reverse. And of course this is really close to our upper containment band, which adds to the probability. You're not going to have 100% winning trades. Obviously this one here worked, big one. This one here fails, you have tiny loss. This one here, went sideways for a little bit, and then once the trend's identified as down and down super weak, we're looking to sell, and that one went down about 15 pips. Somebody emailed me today and said they don't have much time to trade, they want to scalp. I don't see why you wouldn't want to use these FX trade signals. Now obviously there's 1, 2, 3, 4, 5, only 6 signals today. 1, 2, 3, 4 worked. This one you could have made, well, maybe 2 pips max, so that one failed too. 4 of the 6 worked. But if you're watching all the different currencies, you're going to find more signals. And you can, when you add these to your chart, under FX trade signals, you have that option for audio alert. It's on by default. If you uncheck it, you won't hear it. You can just be reading the news, watching, reading any type of article you want, watch YouTube videos, watch movies. And when you get an audio alert, take a look at the chart. Add all the support resistance to the chart, and you can increase your probability dramatically. If you use our currency indexes, which I'll go over now, you can add to your probability immensely. The currency indexes show visually what each individual currency is doing. You can see the dollar gap down against almost every currency on Sunday night. It's way below our lower containment band, so you got to be really careful selling there. But when it works its way back up to the hourly, that's a wonderful place to sell. And you can see at 2 o'clock, the euro just broke down, so you wouldn't want to trade it against that. The yen is underneath its hourly moving average. The pound was underneath its hourly moving average and broke out. You could certainly look for a buy at the pound at that time. You can see the pound didn't get a bounce off the hourly, which frequently does happen. You can see it was resistance here, resistance here. Typically, when it hits this from below, it hits the band from below, the hourly moving average, it tends to continue down. When it breaks out and goes up, it tends to act as support. When it doesn't, you can take a trade right here. When it fails, you can flip and go the other way if you find a currency that's super strong at that time. Alright, so let's take a look at, this isn't the best trade. Ideally you want to buy a strong currency versus a weak one, and sell a weak one versus a strong. But nonetheless, when you see these high probability areas, you can get into trades. You can also use trend lines on here. The dollar's in a really tight range, wait for it to break out. Alright, if it gets weak right here, what's weak at 8:30? Or what's strong at 8:30? The euro's going strong. So obviously, let's start with that. That's a higher probability trade. One's weak, one's strong. You want to buy the euro dollar at 8:30. Or even actually a little bit before that. If you look at this chart, you have a nice little sideways rectangle right here. It breaks out a little bit before 8:15 is when the real signal happened, and it went up 20 pips. Let's take a look at that first instance, the pound dollar at 2. It's very likely to go up a little bit. Now, it's kind of going sideways. If you did buy this breakout right here, you could just stop underneath the low. Guess what? You didn't lose much. In fact, you didn't even probably lose more than 5 or 6 pips. And you by watching the currency index, you can see if you're short, this one's going down, but so is this. This is going down more violently than the dollar. So you can, choose to get out of the trade. Let's find a currency that might be strong at 2 o'clock. Let's take a look at the Australian. Totally different situation. So here you can see the Australian super strong. It's finding support to hourly moving average. It's finding support at the previous week's most actively traded price. And you can see the FX trend intensity off the chart strength is up. The daily, weekly, monthly trend's up, whereas the dollar clearly is all down. At this time of the day, let's scroll this forward here. I had to just brought that chart up there. It's acting as support right there. The Australian dollar is pretty much a no-brainer. As good a trade as you're ever going to find. And you can see exactly what happened. 2 o'clock, you have that breakout, and it goes up 20, 40 or so pips. You got another beautiful little pullback. Usually trends continue until you get some kind of double top, double bottom type situation. If you got into that trade, you might have got out of there with small profit. Got in here again, drew your fibs on here, and got out the fib targets up there. And clearly you have like a little double top up here, which led to the trend reversing. And obviously with the dollar too, going from underneath to above its hourly moving average here at 5 o'clock, and then kind of going sideways for many hours, and then coming up to it again and eventually breaking out to the upside. It's only after 10 o'clock that the dollar's trend has kind of reversed. I wouldn't, 10 o'clock right here, you're still looking for buys. You might have gone into one trade right here with a small loss. But that's how you use the currency index. You buy the strong ones versus the weak. And because the Australian was strong, when the pound broke from above or below to above the hourly, came up to the previous swing high, didn't even reach it, failed up there, you could have sold this one against the Australian at 2 o'clock. The pound Australian very likely to go down. And you can see it did. 2 o'clock, you're looking for a sell, nice little wedge pattern right here, breaks down, and more than likely I would have probably got out of this trade here because it didn't immediately work. You have a little bit of a pullback right here, which I would have got back in. I would have typically exit half my trade when it goes sideways right here with my stop above here, and got out of the second half of it right here. And you can see there's another trade right here, again small win, and then you sell the breakdown of the low. Anytime the market falls a lot and gets no bounce off of it, it's likely to make one more wave down. But you can see, one wave down, 2 waves down, go sideways, 3 waves down. Typically after 3 or 4 waves, markets reverse. So don't get greedy. It's okay to get into a trade at the beginning of the trade. Either the first or second wave typically is what makes you your most money, and sometimes the third. But you can see using your currency indexes finds trades oftentimes 5 to 30 minutes, sometimes an hour or two before the move happens.